Hello and welcome to our weekly market roundup, your one-stop source for the latest in global market trends, key economic insights, and top financial news. I'm your host Daniel, bringing you the highlights and the happenings from around the world. Let's dive into the numbers and stories that moved the markets last week. Global equity markets experienced a strong recovery last week, driven by positive economic data and easing concerns over inflation. Major indexes across the US, Europe, and Japan posted significant gains, with tech stocks leading the charge, while Chinese markets saw modest increases amid ongoing economic challenges. After 2 weeks of significant volatility, US stock markets experienced their best weekly performance in 2024. The Nasdaq Composite saw an increase of over 5%, the S&P 500 rose by 4%, and the Dow Jones Industrial Average added 3%. The market rally was driven by positive economic data, including lower-than-expected inflation, strong retail sales, and rising consumer confidence. This favorable backdrop eased recession fears and boosted investor confidence. European stock markets saw robust growth, with the STOXX Europe 600 index rising by 2.5%. Major indices in Germany and France posted notable gains, fueled by rising expectations of upcoming interest rate cuts. The UK's FTSE 100 index increased by 1.75%, supported by easing inflation fears and speculation that the Bank of England might lower interest rates soon. Japanese markets experienced a strong rally, with the Nikkei 225 climbing 8.7% and the Topix index rising by 7.9%. A weaker yen against the US dollar bolstered exporters, contributing to the market's overall strength. Chinese stock markets posted modest gains, with the Shanghai Composite Index up 0.6% and the CSI 300 rising by 0.4%. The Hang Seng Index in Hong Kong performed better, with a 2% increase. Despite softer economic activity, investor sentiment remained relatively positive, with markets showing limited negative reaction to weaker-than-expected data. The USD-JPY pair advanced 1% last week on easing fears of a hard US economic landing. The British pound strengthened slightly, moving from 1.27 to 1.29 against the US dollar. The euro weakened slightly against the US dollar, dropping from 1.08 to 1.09. Oil prices continued their upward momentum, marking the second consecutive week of gains. WTI crude ended the week higher, maintaining its upward trend, and was trading around $83 per barrel. Gold prices continued their upward trajectory, with futures reaching over $2,500 per ounce by the end of the week. This marks a year-to-date increase of more than 20%. Inflation showed signs of cooling, with the Consumer Price Index, CPI, rising by 2.9% in July on a year-over-year basis. This marked the first time since early 2021 that the CPI increase fell below 3.0%. Additionally, the Producer Price Index, PPI, increased by 2.2%, surpassing forecasts, which strengthened expectations that the Federal Reserve might consider a rate cut in the near future. In July, U.S. retail sales grew by 1.0%, significantly exceeding the anticipated 0.4% increase. This robust growth helped ease concerns about a possible recession and was further bolstered by a drop in new unemployment claims. The University of Michigan's Consumer Sentiment Index climbed to 67.8 in August, marking its first rise in 6 months. Although this is still below the February peak of 79.6, it reflects an improvement in consumer confidence, with inflation expectations hitting their lowest point since December 2020. Inflation in the UK edged slightly higher, with the Consumer Price Index, CPI, reaching 2.2% in July. Despite this, the slower pace of price increases in the services sector sparked optimism about possible interest rate cuts. Meanwhile, the economy grew by 0.6% in the second quarter, continuing its path of recovery. The Eurozone's economy expanded by 0.3% during the second quarter, showcasing resilience even as Germany's economy contracted. The growth in France, Italy, and Spain helped to counterbalance the downturn in Germany. Japan's economy grew by 0.8% in the second quarter, exceeding analysts' forecasts. This growth was largely driven by increased private consumption and a rebound in business investments. When annualized, the growth rate reached 3.1%, signaling a strong economic recovery. There has been ongoing speculation regarding the Bank of Japan's future monetary policy, particularly after recent statements indicating that interest rates would remain unchanged in the face of market instability. In July, China's industrial production increased by 5.1% compared to the previous year, falling short of market expectations. Retail sales, however, rose by 2.7%, slightly outperforming predictions. On the investment front, fixed asset investment remained weak, while property investment saw a significant drop of 10.2% year-over-year. There was a sharp decline in new bank loans in July, raising concerns about the country's economic momentum. This development has led to speculation that the People's Bank of China might implement additional interest rate cuts to stimulate growth. For the 13th month in a row, new home prices in China declined, highlighting persistent difficulties in the property sector, especially in smaller cities where demand remains sluggish. What to watch this week? This week, markets will be closely watching the release of FOMC meeting minutes and the Jackson Hole Symposium for insights into future U.S. monetary policy, particularly any signals about potential rate cuts. Additionally, global PMI data from major economies, including the Eurozone, UK, Japan, and the US, will provide crucial indicators of economic activity and could significantly influence market sentiment. Here is what to keep an eye on. That's a wrap for this week's Market Roundup. Thanks for tuning in. Be sure to subscribe and hit the bell icon to stay updated with the latest market news and analysis. Until next time, stay informed and stay ahead. I'm Daniel, and I'll see you next week.